The next presentation is from Prospect Resources with the ticker code PSC. To tell us more about their Arcadia Lithium Project, I will hand you over to the Managing Director, Sam Hosack. Hello, Sam.
Hi, and thank you for having me. Good afternoon. Welcome to our shareholders who join us here today. Yeah, great to be able to talk to you today about Prospect Resources. Thank you, Jane. Prospect Resources, very briefly, is an African-focused and lithium-focused development business. If we could go into the next slide, please, Jan. I'll probably just quickly get the disclaimers out the way. So just back one slide, please. All our information is presented at prospectresources.com.au. All the information pertaining to our Arcadia project, and obviously advise you to please take a good look at our most recent documentation. Prospect Resources, it's really important for our shareholders and for your investors to probably just take a moment to understand the relevance of lithium producers over the next 5 to 10 years. Very strong thematic, as we heard in the last two presentations around electrification. And in particular for Prospect Resources, we're a lithium-focused asset. We've completed all the resource modeling. We've completed the exploration, and we are very focused now on the development of the Arcadia Lithium Project. It is fully permitted. It is under definitive feasibility. We've done major advances this year in the feasibility in conjunction with specialist lycopodium minerals. And importantly for us, we've taken some of the flow sheet modeling, some of the metallurgical successes that have been illustrated by lycopodium in our pilot plant operation. So we've been operating now for approximately 4 months, and that pilot plant has generated large volume samples for each of our customers to take a look at. So that's been very promising and has been a great demonstration of our abilities in the country. And point number 4, looking forwards, we're in a partnership process. We're talking to various partners in the supply chain, particularly the electrification supply chain. Those partners are being advised. We're being advised with those partners by Zurich Capital. So a lot of work is ongoing there. It is the focus of our partners to go straight to 2.4 million tons per annum. So today we'll have a bit of a chat about who we are, and looking forward to a couple of questions at the end. If you could roll over, please. So Arcadia, we define ourselves as a high-grade, low-cost resource, which is really exemplified in our feasibility study. We do have the principal asset that I'll be focusing on today is the Arcadia project. It is shovel-ready. It's situated just due east of the capital city of Harare in Zimbabwe. And it's a very well-supported project. It's got the attention of the stakeholders and the government, and was recently in the last 3 years discovered by Prospect Resources, drilled out by Prospect Resources, and is the 8th largest hard rock asset globally. So it's really material to the shall we say, the new energy complex, the electrification of our fleet globally. So I think when we look carefully at our project, we like to speak more broadly about the impact of our project as people become more sensitized to the environmental impact of mining and as well the social impact. So just to the north of us is around 10 kilometers to the north of us is a major interconnection power grid between the 2 largest hydroelectric projects in the region. So good, stable, renewable energy. There's a transformer bay there, which we've secured, which will meet the needs of our project. And to the south, we have dual carriageway road, which leads to the export point for our product, which is Beira in Mozambique. So 2 of our key infrastructure considerations are materially resolved and of a very low risk. So further to that, we're situated obviously very close to the city of Harare. All our resources, particular labor, aren't required to be housed on site. They can be bussed in and out. So quite a low footprint in terms of how this project proceeds. And certainly that has an impact on the low capital structure. And lastly, the project is under a special economic zone license. So it is the only mining project in the country of Zimbabwe that has met the, I guess it's the peak incentive. It's met the criteria as a principal exporter and a part of the, should we say, critical minerals. So the special economic zone license is very material in our investment context, and also is a good sort of example of how well supported the government has been. Zimbabwe is, on the rise. We've been operating in Zimbabwe. We feel very comfortable in the region. I've not been able to travel there for some time now, but we have a very competent team, all with very strong credentials in the country and regionally. So there's a strong capacity within our team to manage the environment that we operate in, and it's our preferred environment. We've seen Zimbabwe on the rise for at least on a 10-year trend now, a bit of a blip during COVID, but it's certainly on the rise. There's an increased forecast growth in the economy, which is pleasing, and critical to Zimbabwe's growth is really the strategies that have emerged in the last 4 years, since there's been a major shift in leadership since the end of the Mugabe era. And so those strategies are really centered around growth through to 2030, with 50% of the population under 20. There's a real strong desire to create the means for employment. And of course, mining features and produces or currently caters for around 70% of all foreign receipts. So Zimbabwe is actually a really strong mining country in its own context. The balance of that is of the economic growth is tourism and value addition. So Zimbabwe is really on the rise. We've experienced that. There's a new leadership structure which has been very pleasing to see the effect of change and a sort of renewed strategy, and in particular the Ministry of Mines, where we've got shall we say, an industrial executive, someone from the private sector has taken on their role, and the Honourable Minister Chitando's really has great understanding of what's required to get a project like ours and many projects like ours up and running. So he's had a big role in bringing about the changes that we were benefiting from. So over the course of the last 18 months, Prospect's also undergone some major changes, particularly on strategy. Our strategy has really started at the top. We've had welcomed a new independent chairman and another new director, and sort of independent director, as well as a new CFO. So we've materially altered the structure of our team. We've had the opportunity to bring in strong developments, capabilities, competencies that have allowed our project to undergo the changes in risk profile that we believe are necessary to bring it into production. So the last 6 to 8 months, very focused with Lycopodium Minerals on our feasibility work, and importantly, getting all the risk attended to within the project. So we do have two structures. We looked at a low risk model of going a modular 2-stage approach, and we've got the direct pathway, which has always been and will continue to be our preferred pathway. We wanted the fallback of having an alternate pathway, which is a lower capex model, and we wanted to put that in the market to really show the robustness of our project and the fact that it can actually come in at a much lower and earlier stage and fund itself. And the key outcomes of this, I'll probably just focus on the outcomes if that's okay. Key focus on risk. So one of the major risks that we faced is funding of our project. And we've understood that with a staged approach. You obviously fund stage 1, which is a lower capex. And stage 1 operates, generates revenues, and funds the expansion of stage 2. So look, it's a very prudent, fairly conservative model, and there has been quite a bit of volatility in the lithium commodity over the last 3 years. So it suited us to have a sort of rainy day scenario, but we're far more bullish. We've taken a lot of the risk out of our project, and we continue to be focused on the direct model. Throughout the course of this year, we've been focusing on our pilot plant. We've taken key aspects of our flow sheet that are not well understood by our investors or our market, and we put those into a flow sheet that allowed us to procure and build a project in Zimbabwe. That pilot plant's been operational. We've produced just under 100 tons so far, and we've been shipping that to our customers primarily in Europe. And this is mainly a petalite product, which is one of our primary products. So look, many great outcomes from this, and the key outcome being demonstrating our capabilities. The key outcomes of the stage OFS, this is the dual stage and going stage 1, stage 2 within the first 5 years. I think the key outcomes for us were demonstrating the free cash flow, demonstrating the volumes that can be produced, looking at the internal rate of return, and throughout the process, trying to drive down the capital cost, first capital hurdle. So at $140 million allows us to get into operation, and the cash flow generated from stage 1 continues to fund expansion. So really a low-cost producer, even at a less efficient dual stage strategy, shows that this is a great 20-year life of mine project that has good economic merits. Thank you. So marketing of our products, we obviously understand our customers. Our customers, particularly our stakeholders, all understand spodumene and the thematic. We understand the electrification. There's some major deficits emerging, and these are really strengthening the position of Prospect and the Arcadia project. And in particular, as we see different territories such as the EU trying to ramp up their independence in the supply chain. We also have 2 key customers, offtake customers secured, principally for petalite. We have Sibelco in Europe and Sinomine, who are interested in mostly chemical products which go into the EV sector. So what differentiates a Prospect from its peer group is that we have major exposure to the electric vehicle growth and that narrative, but we're also very exposed to a very niche market which has traditionally very robust, strong fundamentals. It makes up about 20% of all lithium consumed classically, and that's the technical market. So our petalite, particularly the low impurities in it, make it a very key part of that technical market and unlocking it. So petalite is a fantastic opportunity for Prospect and for its shareholders. And importantly, the technical market, which is very much connected to the broader market, which is the electric vehicle market. The technical market has substantially higher barriers to entry, and that is fundamental to the geology and the mineralogy of the products that each of our peers produce. And petalite is a very premium product in that market. That market's approximately 25. We would make up about 25% of that market. That market's been classically very supply constrained, and we've relied on Roskill to do a very deep dive into that market, understand who the customers are, understand all the supply options that these customers have, and give us some clear narrative as to how petalite would fit into that market. And the resulting outcomes from Roskill were a pricing structure and a supply and demand model for the life of mine of this project. And it's very pleasing. A ton of petalite sells for approximately $959 US per ton for life of mine. So it is a premium product in respect to the price it attracts comparative to a ton of spodumene. So I would like to summarize. I do want to keep within the time limits here, but look, the Arcadia, it's a world-class asset, global top 10 hard rock asset. It's fully permitted. We're on the ground, we're operating there. We have a team, we have a structure, we have the experience. We like our environment. We have strong connections and relationships within the supply network, within the support network, within the services sector. The pilot plant has been extremely successful. It's not only demonstrated the low risk selections within our flow sheet, but it's also produced high volume product that we can put into our market, circa 200 tons towards the end of the year, which would allow each of our customers, particularly in the technical market, to benefit from testing their operations using our product. The cost base and the geology leads to a very low cost of operation with a very high purity output and product. And with the OFS, direct OFS imminent, and our partnership process that's being run by Azure Capital to fully fund the project, we feel the next 2 to 3 months is really our main stage. And we're looking forward to bringing all our investors and shareholders some positive news there. So that's the final slide from Prospect Resources. Thank you for having me.
Well, Sam, thank you for joining us on Broker Briefing, and a copy of today's recording will be available online in the coming days. Thanks for that, Sam.
Thank you, Jane.